All right, let's do Fibonacci traps with dairy. Today is June 24th. I'll talk about today's example and I'll talk about yesterday's example as well. Guys, it can simply be as easy as executing the same setup over and over again. We don't need to have FOMO. We don't need to have hindsight. We don't need to be swapping back and forth between long and short every single day. We can simply apply one setup to execute and extract consistent profits. So what is that methodology? What do we look for? First of all, we always look for a false breakdown. A false breakdown is simple. We're looking for trapped sellers. We're looking for liquidity in order to move back to the upside or liquidity to break out. Liquidity is created through trapping people that expect the market to head lower, even though institutions could be possibly loading up at a specific area of interest, a specific area of support. And those areas of support are noted through multiple lows, like how we have here from 3:50 a.m., 8:30 a.m., 7:20 a.m., and 9:35 a.m., or simply a low that catapulted the market to the upside, which would be today's RTH low. Right, so for today's Fibonacci trap, we were using all of these lows as the example. We were looking for a possible trap into last week's high, 6109. If I hop into the notes right here, the important supports, this area marks the prior week's high and bulls printed a clean breakout after hours. We can watch for the false breakdown here, maybe into 1694.75. Obviously, we didn't get to 1694.75, but we did indeed print a false breakdown of 6109. So if you didn't have the limit order waiting at 6109, what would you do instead? You would draw the Fibonacci trap and you would look for entry based upon the higher low that's reacting off of today's low. All you're betting on is that the low of day can potentially be established, and if we are to pull back for a higher low, the sellers that are chasing the breakdown below all of these lows are trapped, creating liquidity back to the upside. In which the 0.5, the 0.382, there's no wrong option here for entry, so long as your stop loss is going behind the low of day, because that's where the false breakdown, that's where the trap is trying to be printed. And then from here, your 1 hour target gets hit quite nicely. That's where we want to scale out, and obviously the rest is history. Let's talk about yesterday's false breakdown, in which really ignited this entire amazing move to a new weekly high. So we go back here to the notes from yesterday. Let's scroll back up. So we have the false breakdown of 6,250 in alignment with 59,150 support. So let's go back to the chart. 6,250 is right here. This is the 7:45 a.m. low. This is a significant pre-market low in which catapulted the chart into the next significant resistance. So as you can see, we slice below the level, 6,250, reclaim above the level, and print the Fibonacci trap. Right? If I draw a low to high like so, you can see that this candlestick, this outside bar pulled back into the RTH low. But again, it doesn't really matter where you enter here. It could be the 0.382, the 50%, so long as your stop loss is behind the low and you hunt your 1 hour target. That is the execution in which we need to apply to every single Fibonacci trap, to every single Fibonacci trap setup, right? And then your runner will take care of any more upside that the chart has left in store. So if you guys gain value for this, let me know. I'm very excited to continue showcasing the Fibonacci trap. I think it's going to be revolutionary to people that struggle with maintaining some sort of consistency with their trading. And in all honesty, the best setups are really printed when you're trading the traps, right? As always, that's where the best reward, risk to reward, in my opinion, is printed. If you want a one-on-one session with me, we'll do a deep dive into the setup. We'll talk about everything in a very private and great session. Email rich@tradingwars.com if you're interested in that, and I'll see you tomorrow.